Assalamualaikum warahmatullahi wabarakatuh. My name is Zaza Amira binti Zabi, and I am going to present on project FAR610 together with my friends, Izzatiyusra, that will be presented after me. So, I am the one that will be presented on the question 1 A, B, C, and Izzatiyusra will be presented on question 1 D, E, F, and Nahima will be presented on question 2, and the last one is Zatil that will be presented on question 3 and 4. Let us get started. So for the question 1A, to answer the question on what is the method, what is the appropriate method for Mercury Berhad to record the investment in Venice Berhad and Mas Berhad. So we are going to use acquisition method. It involves 4 steps, which is identifying the acquirer, determining the acquisition date, recognizing and measuring the fair value of net assets and non-controlling interest, and recognizing and measuring goodwill or gain from a bargain purchase. So why we use acquisition method? Because this is because of Mercury Berhad had acquired ordinary share capital from Venice Berhad and Mas Berhad for 60% and 70% respectively. So it means that Mercury Berhad has control over them. Therefore, the relationship between them is known as parent and subsidiaries. Since the parent controls the operating and financing decisions of the subsidiary, it is worthwhile to look at both the company's financial performance and financial position together. Consolidated financial statements are prepared to achieve this objective. So, in the acquisition method, the parent includes all the assets of the subsidiary on its consolidated balance sheet and includes all subsidiaries' revenues and expenses in its consolidated revenues and expenses. It creates a component called non-controlling interest or minority interest in its equity section, which represents the claim of others on subsidiaries' net assets. Let us proceed to question B on goodwill for Venice Berhad and Mas Berhad. For goodwill, as usual, we will record on the consideration transferred plus NCI and minus the fair value of net asset. And if there is any impairment, we will deduct the impairment after we have calculated the goodwill. So, for Venice Berhad, under the ordinary share capital, the consideration transferred is 3,600, and we will add the NCI amount. But before we calculate for NCI, we will consider on the fair value of net asset at DOA first. So fair value of net asset at DOA is when we record only the transaction that has been incurred before and at the date of acquisition. So for this question on Venice Berhad, we will have ordinary share capital, pre-general reserve, pre-retained profit, and also ARR for the plant and equipment. So the amount of fair value of net asset at DOA is 5,200, and the amount will be brought to NCI, that will be multiplied by 40% because of the amount of parent, of the percentage of control for parent is 60%. So for NCI is 40%, multiplied by 5,200, we will get 2,080. As I said before, if there is any impairment, we will deduct the impairment first. So for the impairment, there is 5% of impairment, which is amounted to 24. So the total goodwill will be 456,000. For Mars Berhad, the goodwill will be treated same as Venice Berhad. It's just that the amount of the consideration transferred, the NCI and fair value of net asset at DOA will be different. So consideration transferred for Mars is 2,520. For the fair value of net asset at DOA, it consists of OSC, which is ordinary share capital, pre-retained profit, and ARR of customer lease. The amount of fair value of net asset DOA, which amounted 4,550, will be multiplied by 30% to get the amount of NCI. So the amount of NCI is 1,365. So the consideration transferred will be added with NCI and minus with fair value of net asset DOA. We will get the amount of bargain purchase of 665. Other than OSC, for Mars Berhad, there will be PSC. So for the consideration transfer is 400. The NCI is 60% because of the parent control is 40%, minus the fair value of net asset of 1,000. So the total for consideration transferred plus NCI is also 1,000. So the amount will be 0. Next, to answer the question C on how we calculate the NCI and group retained profit, we will calculate on all the transactions that incur for the year, which is after the date of acquisition. So we go through for Macquarie Berhad first. The retained profit for the group retained profit for Macquarie Berhad is calculated by the balance CD of 16,800. We add a minus with all the transactions that incur during the year, which is URP, ordinary share dividend receivable for Venice Berhad and Mars Berhad, depreciation for equipment, and ordinary share dividend payable, and also for debenture interest. So the total for general retained profit for Macquarie Berhad is 16,425. Next, for Venice Berhad, the group retained profit is we apportion it based on the percentage of control, which is for NCI is 40% and also for group retained profit is 60%. The total amounted 4,400, and we get from the balance CD of 6,500 for balance CD. We add a minus with all the transaction of pre-retained profit, ordinary share dividend payable, in-payment loss, and depreciation for plant and equipment. So the amount of 4,400 we multiplied by 40% for NCI and 60% for the parent. Next is for retained profit for Mars Berhad, which is also the subsidiary for the parent. In balance CD of 1,100, we add a minus with all the transaction, just like we treat for the Mercury and also for Venice. The amount will be negative 100. But for this time, in Mars Berhad, the percentage of control for NCI is 30%, and for group is 70%. So the amount will be 30 and 70 respectively. We go to general reserve. For general reserve in Mercury Berhad, there will be no changes. So we just take the balance CD of 4,000 to be in group reserve. For general reserve of Venice Berhad, the balance CD amounted 500 will be minus with pre-January reserve and also the bonus issue, which is negative 100, which is 100 and 400 respectively, that will be amounted to 0. So there will be no value for the January reserve of Venice Berhad. And for the return profit, just now we have to add or minus with the bargain purchase and the impairment, if any. So in this question, there is impairment amounted of 24. So the bargain purchase of 665 and the impairment, bargain purchase and also the impairment must be included in the group return profit. So this make the total of group return profit of 19,636, and for NCI is 7,275, and for the group general reserve is 4,000.
Okay, I will proceed to question D, which is consolidation statement of profit or loss for the year ended 31st December 2017. For calculating profit or loss, we must add the value for Mercury plus Venus and Mars. But for Mars, we need to multiply with 6/12 months since they acquired share on 1st July 2017. So for the first one, which is revenue, we need to minus 15,000, which is we take from the additional information number 2, and we minus another 30,000, which is from additional information number 3. For the cost of sale, we must minus 15,000, which is from additional information number 2, minus 30,000, and plus 200, which we take from additional information number 3. And then we got the gross profit, and after that we plus the gain on disposal and preference dividend receivable, which have the value of 0 since there is intra-transaction that occurred between holding and subsidiaries. After that, we less the operating expenses. We treated all the depreciation that occurred for that current year, and we plus with interest income minus impairment goodwill minus impairment loss of IA and minus finance cost, which is we calculated 140 minus 100 and plus 100 since there is debenture interest which is valued as 100. So after that we plus bargain purchase, which is 665, and we got the profit before tax, which is 18,501, and less with taxation, and got the profit after taxation, which is 11,651. For the profit attributable, it will be calculated based on NCI, which is 40% times 4,700, and we got 1,880 plus with 60 from PSC, and we got 1,940. So the value of NCI will be 1,940, and the holding company will be 9,711. So to calculate the consolidated statement of changes in equity, we got the value from working one before, and we plus any acquisition during the year for OSC and 2% PSC, and then we plus the profit for the year that we had calculated before in statement consolidated statement of profit or loss, and we minus any dividend paid from OSC and PSC. For the balance CD for NCI, we got 5,800. For GRP, we got 19,561, and for GRR, we got 4,000. Next, let me proceed with question F. Consolidated statement of financial position of Mercury Berhad as at 31st December 2017. Okay, for the first one, for PPE under asset, we will add up all the value and we minus or plus any accumulated depreciation or accumulated amortization that occurred. So we got the value 34,800, and for inventory we got the value 11,800. Okay, for bills receivable, we will calculate 25 minus 15, which we got from which will get the value 10. Since there is intra transaction that occurred between the holding and subsidiaries. And then we got the preference share dividend, account receivable 10,525, and bank we got 2,700, cash in transit 200, goodwill 456, intangible asset 1,000 minus 200, and we got 800, and loan from us nil, since there is intra transaction occur between them. For equity and liabilities, for OSC, which is ordinary share capital, we plus 100,000 plus for equity and liabilities, the first one for ordinary share capital, which is OSC, we plus 10,000 with 2,100. 2,100 we are calculated based on 2,100 plus 2,100 of share multiple with the par value, which is Rm 1 ringgit, and we got 12,100. For the share premium, we times the value of share 2,100 times with Rm 20 cent, and we got 420. For the bills payable, we minus 25 with 15, and we got 10. For ordinary share dividend, 200 plus 200 minus 120 plus 150 minus 105, and we got 325. For the preference share dividend, 100 minus with 40, and we got 60. And for the account payable, 11,565 plus with 4,200 plus 700 minus 1,000, and we got 15,465. For the balancing figure, we got 61,291.
And then question 2A is about how we know
We want to know the area covered by the contractual arrangement under phase 11, which is joint arrangement. For the joint operation, the party to the arrangement have right to the assets and obligation for the liability relating to the arrangement. For the joint venture, the party to the arrangement have right to the net assets. It is the separate entity that has the right to the asset and obligation for the liabilities relating to the arrangement. For the question B, the joint control exists when the party contractual agree to the share control and decision about the relevant activities of the joint arrangement have the unanimous consent of all the parties sharing control. For example, A, B, and C are parties to the arrangement where A has percentage of control 60% and B 30% and C 10%. The contractual agreement between the three is that at least 80% of voting rights are required to make decision. In this case, A and B have joint control as A needs to consent of B to make decision about the relevant activities. C is party to the joint arrangement. Question 2. C. Accounting treatment of joint arrangement. Joint operation will be recognized in their own financial statement, their interest in the assets, liability, revenue, and expense in the joint arrangement. For the joint venture, is initially recognized at the cost and carry amount. It is increased. Amount is increased or decreased by the investor share or the post acquisition profit or investee profit or loss. The investor share of the investee profit or loss is recognized in the statement of profit or loss.
Okay, now I will proceed for question 3. The relationship between Lily Berhad and Barry Berhad before and after the right issue. Before the right issue, Barry Berhad is a subsidiary of Lily Berhad. Since Lily Berhad acquires 600,000 of 800,000 ordinary share in Barry Berhad, which is 75% of its ordinary share. After the right issue, Barry Berhad is an associate of Lily Berhad because it has significant influence towards Barry Berhad. Okay, next is the amount of goodwill on acquisition. To calculate the goodwill, we must consideration transfer must minus of fair value of net asset of Barry Berhad. The amount of consideration transfer is 1,800 minus 1,600, and the total for goodwill is 200,000. To calculate gain or loss arising, proceed on disposal, we must add with fair value, which is proceed on disposal 240 times with 50 cents, we will get 100,020, and fair value 60% minus times 600 times 5 ringgit, and we will get 1,100,000. After that, we must minus fair value net asset, which is 3,750,000. When after that, we will get loss on disposal, which is 1,830,000.